Hello and welcome to ETBFSI.com by the Economic Times. I have with me Professor Aswath Damodaran. Sir, it's a pleasure to have you on this show.
Thank you for having me.
So to begin with, my first question is, how do you value or look at the Indian market right now? Because in the last 2 years, Sensex, Nifty both have crossed more than 20 to 22%. And now, we still believe that the Indian market is doing its best. So how do you value it now?
The same way you value it at any point in time, it's based on what you see as the potential revenues, earnings, cash flows you get from Indian companies. And that's going to be driven by the India story. The stronger India does in terms of its economy over time, companies benefit. Ultimately, the real economy drives everything else. So the Indian market reflects that India story driving everything. And that India story is a big one. It's a big story, it's a strong story. But the question is how much, what are the weakest links in the India story? And I think the market reflects the good stuff in the India story. The big question is, are the weak links going to come in the way? History suggests that you don't go from 10 to 100 linearly, that you go to 10, that you take 5 steps forward, 3 steps back. So if you're an Indian investor and you enter a period where the market consolidates or goes down, it doesn't mean the market has completely changed course. It's just reoriented, and that's healthy. Markets that just go up and all they do is go up tend to become unhealthy markets. They get bubbles and they get, So I think the Indian market is going through a phase of consolidation right now after a period of growth, and that might not be the worst thing for the market. It gets into a point where it kind of adjusts, which means there will be companies that decrease in value and others that increase in value during this phase because you're trying to figure out where you got things right and wrong.
Absolutely. Consolidation is a very, very meaningful thought there, and great to know that from your side. But if I ask specifically, sir, is it undervalued, is it overvalued, or it's a really valued
At the start of this year, I called India the most overvalued market in the world. And it is in terms of the pure data. It trades at the highest multiple of earnings of any market of any substance. There might be some small markets which trade. It trades at multiples of earnings you don't see anywhere else in the world. Well, I think the response you often get, but there's higher growth. Even if you factor in the growth, the price earnings that you're paying for Indian stocks is far higher than I think it should be. So I called it the most overvalued market in the world. That was maybe February, March, early March. We're now a few months later, the market has consolidated. It's been going sideways. But you now added new uncertainties to the mix, right? You've got tariffs, you've got these trade wars, the world economy is kind of getting shaky. So I think if you ask me where do I see the Indian market now, it's overvalued in March, and there are more risks now than there were before, and the market is still where it was. It's still overvalued, at least from the perspective of investor who has choices.
Yeah. I was coming to, in fact, tariff. I mean, though everyone believes that it's a great story, India's story is great, and in fact, even if you look at the high frequency economic indicators, they are also showing a great signs of recovery and a positive factor of India. But what kind of impact do you see on Indian economy, specifically with geopolitical tensions and Trump tariffs of 50%?
Near term, it's undeniable. It's going to be a negative. There is no way you can spin this story to make it a plus story, right? It's a minus story. Long term, and this sounds weird, this might actually be a plus for India, and here's why. Countries are turning inward, right? Not just the US, but across the world, countries are turning inwards on immigration, on trade. And as you turn inward, it's a domestic market that you become dependent on. The US is a big domestic market. It can live with the domestic market. The EU has a domestic market. Most countries don't have a domestic market big enough. India has an advantage. When you've got 1.3 billion people, you've got a big market. The market in India is large enough. I mean, do I think globalization helps all companies? For the most part, yes. But taking away globalization means that countries like India have an advantage over smaller countries like Vietnam, which don't have enough of a domestic market to carry them through. So that's where we end up. And the end game here is we have more inward-looking policies that drive countries to look inward. India is in a better position than most other countries because of the size of its domestic market.
Absolutely. Sir, I would like to also talk about the banking sector specifically, because I see the whole value chain is, shaping up in a different manner. For example, retail growth is increasing. There is too much of retail growth, but the corporate growth is not happening. Bankers are worried about the credit growth, specifically on the corporate side or the industry side. But on the other side, corporates are borrowing from the market because they find borrowing from market is quite cheaper than taking a debt from the bank side. Similarly, AIF and private credit is also increasing. So how do you see the whole banks and this value chain shift?
Banks have to get into the 21st century, right? For much of India's history, banks set terms and companies had no choice but to accept them. Banks have to accept that those days are done, at least for those companies that have choices. There's in insurance, there's this notion of adverse selection. If banks are rigid about the way they set interest rates, it's predictable what's going to happen. Companies that have choices, especially the safer companies that can borrow at a lower rate, are going to bypass the banks and go to the market directly. There will be people who will continue to borrow from the bank, but those are the people you least want borrowing from you, because they're the ones who look at the fixed rate and say, you know what, that's a bargain for me. If I went to the market, I'd be paying much more. Banks can't win if that becomes the end game. So they'll have to think about how they set bank borrowing rates for corporates that are more adaptable, more flexible, that reflect the true default risk of those companies. And I think if banks don't do that, they will increasingly lose market share to a bond market, and that's almost unavoidable.
Yeah, certainly. But on specifically again the corporate side, sir, or the market side, the companies, those companies which are coming to the Indian market now, there is a long list of the IPOs. The observation that I have here is the companies don't have even capacity additions or the major plans, or they are not building assets, but the investors or the promoters are going for exit options, and that is where they want to generate their value. Is it a good trend that you see?
It is the nature of the beast, right? Which is, if you're a venture capitalist, here's how you make money. You enter at the right time and you exit, you sell the company. This is true across the world, it's always been true. I mean, it's not the job of venture capitalists to build businesses because that's what investors want. For their job is to build a business that's large enough that it can live as a publicly traded company. So I think for the last 30 years, the shift has been towards, once a business is ready, investors are ready to invest in it, even if its business model is not complete, you're going to go public, right? And then as a public company, you try to continue to build a business model. So I think we might not like it, because especially older investors remember a time when if you had an IPO, it was of a company with an established business model. I don't think that's true anymore. 1980, when Apple went public, it was a well-formed company, a working business model. In 2019, when Uber went public, it was still an unformed business model. The company hadn't figured out how to make money yet. So I think but as an investor, investing is a choice. You don't have to invest in IPOs. If you don't like buying companies with unformed business models, don't complain about it. Just don't buy them, right? It is what it is. And there will be investors who self-select, who say, I'm okay with that, and go ahead and buy those companies anyway.
The interesting trend that is also there is the family offices. Venture capitals are investing heavily into different segments, and every industry, every top corporate has opened a family offices. How do you see this trend shaping up, where industry is not investing into assets, not creating capacities, but they are trying to multiply their money?
It might not be a bad thing. Maybe you don't want, if India is going to grow into new sectors and new businesses, maybe the old family groups are not the best position to be starting businesses in that space. But there will be businesses that need capital, so I don't see this as a problem. And if you're a family business, you've built up wealth over the last century, you can see the new sectors opening up, but you're not comfortable in those sectors. That's not, you're a manufacturing family group, and these sectors are tech groups, and you're not. Maybe the best thing for you to do is take the capital, invest in a company in that space, so both sides emerge as winners. The young startup in that space now has access to capital, and the family group now gets a chance to make that upside if that company takes off. So I would not want some old family groups being the drivers of investments in some new sectors, and this might be a way in which you escape that trap.
Absolutely. And importantly, so startup rally, India has seen a great startup rally. We were the third largest nation when it comes to the startups, but suddenly the funding has been drained. Investors are going very cautious. So where is the
It's a
India
global
startup?
phenomenon. Since 2022, venture capital has gone, risk capital in general has gone into hibernation. Why? Because 2022 was a bad year. And this is not new. The history of venture capital and risk capital is it ebbs and flows. You have hot markets and cold markets. This is a relatively cold market. So this is not new. It's happened before and it'll change again. There will be a hot market again. So for the moment, if you're seeking out venture capital, it's far more difficult than it was in 2021 was peak insanity, right? Everybody, I think there was actually too much venture capital sloshing around for about a decade. Businesses said that no business actually getting capital and scaling up or getting capital and scaling up. So maybe this is not such a bad thing, is a return to sobriety in venture capital where people say, you know what, maybe we need to rethink what kinds of companies, you know. But that takes a little adjustment, and I think we're going through an extended adjustment phase. But this too shall change. I mean, there will be a point where venture capital will be back again.
Okay. Uh, Overall, when you look at the India story where we started off, what will make India economy grow to what they wanted to? For example, now we are already fourth largest, we are marching towards third. What will be the positive factors and what will also maybe perhaps train us down?
The positive factors is you have a large population that is getting increasingly well off, and that carries a whole host of businesses that are going to benefit, right? More refrigerators, more cars, more two-wheelers, and that creates growth in it. So that's the biggest force driving the growth up. The problem though is when you overreach on some of these dimensions, you can sometimes get, recessions are just the economy's way of saying, hey, you overreach, that's correct. There will be corrections like that along the way. So I think the India story clearly has legs, but I think that people who buy into the India story also have to recognize that there will be slowdowns during the period. And of course, as a democracy, you will have changes that are pretty significant in rules and regulations and laws that come from a different government coming into place. And those are all part of the story. This is not like China, where Beijing can promise you continuity for the next 25 years and say this is what the rules are going to be. The nature of a democracy is no government is in a position to promise continuity. The nature of a democracy is another government comes in, they can change the rules on you. Businesses often don't like it, but it's part and parcel of that process.
Yes. So often the thought comes to my mind when I look at Nvidia or Apple or the Facebook or those top companies. India is a great country. We have also a lot of companies or maybe the most valued companies, but there is nothing which could even match Apple, Nvidia or those.
It's not just India, right? In fact, the US is unique in that sense. Europe has no great tech companies. Latin America has no great tech companies. Canada has maybe a couple, Shopify. Maybe in Europe you have Spotify, basically. But there's a question: what is it about the U.S. that allows? And many of these big tech companies are young tech companies. Facebook is 13 years old. To go from nothing to $2 trillion in market cap, there's something in the process that allows that to happen in the U.S. but doesn't seem to allow it to happen elsewhere. So if I were an Indian rule maker regulator, the question I'm asking is, what is it that will allow a small unknown company with a great technology to be able to become a large mega cap company over a period of 15 years? And why is it not happening in India? It can't be that we don't have the brains, because some of these big tech companies outside India that become big companies were started. So clearly it's not the fact that it's Indians starting the companies, it must be something in the system that's getting in the way, right? So that might be worth examining, because if India wants those 5 of the top 10 companies or 3 of the top 10 companies to be young Indian companies that have come out of nowhere and shot to the top, that part of the process has to be fixed. And that might be worth asking, what is it that's keeping it from happening?
What kinds of sectors that India has now will add a more value to the economy going ahead? Which sectors, if you could?
I think healthcare. Healthcare to me is what I would watch in India. I've been saying this for a while. It is because we know what happens as countries prosper, as more people come to middle class. If we talk about discretionary income, one of the items, in addition to travel and entertainment, which already we're looking at a growth, One of the other items that people spend more on is healthcare. Because as you have more money, you visit the doctor more, you have MRIs and X-rays and things you never would have done if you didn't have the money. And in India, that is going to be an explosively big business because
Okay.
of the number of people getting help.
Hmm.
So it is going to be a big business. And right now, it's still in its feeling its way to a lot of the healthcare environment in India is just what you see in the US or Europe, kind of replicate hospitals and MRIs that does diagnostics. I have a feeling that there is a place in India for a truly India-centric healthcare business, a healthcare business built for the very special challenges that are going to come from giving healthcare to 1.3 billion people spread across a country with very different needs. And I'm interested in seeing what that company will look like. If that company is going to be able to be one of those mega cap markets.
Right. So I just missed asking you this when the banking question, because banking is still a growth story that people believe in, though the fintechs are trying to eat the cake. What is the future of the banking in your view?
You need banking services always, right? If you define banking services, there's some place to put your money to earn some place, somebody to loan us. We always need banking services. The question is whether we need banks to provide those banking services. That's the big, question that the last 20 years have opened up.
Right.
I'll give you an example. In Latin America, there's a company called Mercado Libre. Mercado Libre is like, people think of it as the Amazon of Latin America. And it is. It runs an online retail business that very much like Amazon, great company. But it's also one of the fastest growing online financial service companies. Okay, what? Because what it does, it offers Latin Americans a place to deposit money, like you would bank. It offers much better terms than a bank does. And it's in the 21st century. It says, look, we'll give you a debit card for free. You can, so you can move money around.
Right.
And they've now entered the investment business. They offer mutual funds. So in a sense, they have a huge platform of people, and they're using it to offer what used to come from banks and investment banks and investment management firms, essentially in the same platform where you buy your online stuff.
Right.
And I think that that's going to be the challenge for banks, is as technology allows us to do more of what we required banks in the first place.
Right.
Now, what is the remaining role for banks? What exactly will banks be needed to do?
Right.
And I think for the moment, they're protected by regulations. The system is their best protector. There are some things the system requires a bank to be part of. But if you took that systemic protection, I'd probably skip the bank.
Right.
I mean, the moving money in India, I mean, I look at, UPI, it's an astonishing development that you can. I mean, I move money in the US. I have to move from one bank to another and pay a bank buyer, right? Which is absolutely absurd. And there are lots of soft parts of the banking business where banks are able to make money because that's the only way it can do things.
Yes.
And that's going to kind of become shaky over time. They're going to be cuts.
Yes. So lastly, AI is the flavor of the season. Every industry, every sector is trying to embrace AI as if there is no tomorrow. What is your view on AI? How do you value AI? Do you think it will actually add value?
No, to change value proposition, right? You can't add value because it's a cost to most companies, right? So it can change a cost. The problem is if everybody has AI, nobody has AI. What I mean by that is, let's say that there's an AI product that retailers can use to manage inventory better and lower their costs. That's good, right? But if every retailer uses it, lower the costs across the board, nobody's going to be able to make money on it because you then will have competition, your prices will drop. So the question with AI, I think, is not whether it's here and will change the way we do things. I think the answer is absolutely. I think it's going to be very difficult to monetize whatever benefits you think as a company by replacing people with AI, because if everybody can do it, there might be a benefit to the customers of the company. They might get lower prices, but I don't see how the companies themselves benefit.
Absolutely, sir. I'm done with my questions, but on a lighter note, one thing just we all would like to know, because we keep following you diligently, how do you update yourself so regularly?
I don't think I do it regularly. I don't, the data updates I do, The rest of the stuff, I'm a dabbler. I move along, and maybe being a dabbler helps because I look at different things. I'm not focused. I mean, I think there's so much stuff in each individual segment that if you're a specialist, you can't keep up because you have so much stuff to keep up. Luckily, I don't have that requirement. I don't have to keep up with what's happening in the stock market. I don't have to. So if somebody says, well, what do you think about the PE ratio of the steel sector? I said, look, I haven't looked at it for a while, because it's not something that's interested me. The plus of that is I can go, keep tabs on things in the rest of the world. And that's really a big part of investing.
That is truly meaningful, sir. Thank you so much. It's a pleasure to connect with you and listen to you. Thank you so much. And thank you so much for watching this show. Thank you. Stay connected to etbfsi.com by the Economic Times.